Breaking. The silver market just got absolutely rocked, and what JP Morgan is doing right now should have every investor on high alert. Here's what they're not telling you on mainstream media. JP Morgan has been quietly accumulating one of the largest physical silver stockpiles in history. We're talking hundreds of millions of ounces, while simultaneously, the U.S. government just made an emergency move that could send silver prices into the stratosphere. This isn't speculation, this is happening right now. While you've been watching stocks and Bitcoin, silver has been setting up for what could be the biggest price explosion we've seen in decades. And JP Morgan? They positioned themselves years in advance. They paid massive fines for market manipulation. But here's the kicker. Those fines were nothing compared to the profits they're about to make. The U.S. emergency move I'm about to reveal changes everything. We're talking strategic reserves, industrial demand going parabolic, and a supply crunch that could make the 1980 silver surge look like a warm-up act. In the next few minutes, I'm going to expose exactly what's happening, why JP Morgan has been playing 4D chess while everyone else plays checkers, and most importantly, what this means for your financial future. But first, smash that like button if you want the truth about what is really happening in the silver market. Let's get this video to 10,000 likes and show YouTube that real financial news matters. Alright, welcome back to the channel, and if you're new here, you've just stumbled onto something that could genuinely change the way you look at precious metals forever. What I'm about to share with you today is not some conspiracy theory cooked up in someone's basement. This is documented fact, this is happening in real time, and the implications are absolutely massive for anyone who understands where we're headed economically. So let's dive straight into this because time is genuinely of the essence here. JP Morgan, one of the largest and most powerful financial institutions on planet Earth, has been systematically accumulating physical silver for years. Now, when I say accumulating, I don't mean they bought a few bars to diversify their portfolio. I'm talking about a coordinated long-term strategy that has resulted in them holding what many experts believe to be the largest private stockpile of physical silver in human history. We're talking somewhere in the neighborhood of 600 to 800 million ounces of physical silver sitting in their vaults right now. Let that sink in for a moment. 800 million ounces. To put that in perspective, the entire annual global silver mine production is around 850 million ounces. JP Morgan has accumulated nearly an entire year's worth of global production. They didn't do this by accident. They didn't stumble into this position. This was calculated, deliberate, and executed with military precision over the course of more than a decade. But here's where it gets really interesting, and this is where most people miss the full picture. While JP Morgan was building this absolutely enormous physical position in silver, they were simultaneously getting absolutely hammered by regulators for manipulating the silver market. In 2020, JP Morgan paid $920 million to settle charges brought by the Commodity Futures Trading Commission and the Department of Justice for spoofing the precious metals markets. $920 million. That's not a slap on the wrist. That's one of the largest fines ever levied for market manipulation. Now, most people looked at that fine and thought, okay, JP Morgan got caught, they paid the price, end of story. But that's not how you need to think about this. You need to think like the strategic masterminds running these institutions. That $920 million fine, that was the cost of doing business. That was the entry fee to build a position so massive, so strategically important, that when silver finally makes its move, that fine will look like pocket change compared to the profits they're going to generate. Think about it logically. If you knew you could pay $1 billion in fines, but position yourself to make $10 billion, $20 billion, or even $50 billion in profit, wouldn't you do it? Of course you would, and that's exactly what's happening here. JP Morgan took their lumps, paid their fines, and all the while they kept accumulating physical metal. They were playing the long game while everyone else was focused on the headlines. Now, let's talk about what's happening right now with the United States government, because this is where things get absolutely wild. The US government has just made moves that signal something major is shifting in how they view strategic metals, and silver sits right at the center of this transition. We're living through the greatest technological transformation in human history. Artificial intelligence, electric vehicles, solar power, advanced weapon systems, telecommunications infrastructure. All of these technologies require massive amounts of silver. Silver isn't just some shiny metal that people make jewelry out of. Silver is the most electrically conductive, thermally conductive, and reflective metal on Earth. It's absolutely irreplaceable in modern technology. Every solar panel requires silver. Every electric vehicle requires significantly more silver than a traditional combustion engine vehicle. The electrical contacts, the circuit boards, the charging infrastructure, it all needs silver. And here's the critical part that most people don't understand. There are no substitutes that work as well as silver for most of these applications. The US government understands this. They understand that silver is now a strategic national security issue. We're in an economic and technological Cold War with China, and China has been securing supply chains for critical materials for decades. They've locked up lithium supplies, rare earth elements, and yes, they've been stockpiling silver as well. The United States is now waking up to the fact that they've been asleep at the wheel, and they're making emergency moves to catch up. Recent government actions have included provisions to establish strategic reserves of critical minerals, and silver absolutely falls into that category. When the government starts talking about strategic reserves, that's not casual dinner table conversation. That means they're looking at potential supply disruptions, potential conflicts, potential scenarios where access to these materials becomes a matter of national security. And when governments start competing with industrial users and investors for physical supply, that's when prices go parabolic. Let us talk about the supply and demand fundamentals here, because this is where the story gets even more compelling. Global silver demand has exceeded mine supply for multiple consecutive years. That means we're drawing down above ground inventories. We're consuming more than we're producing. Now, eventually that equation has to balance, and it balances through price. The price has to rise enough to either incentivize more production or destroy enough demand to bring things back into equilibrium. But here's the problem with silver production. You can't just turn on a silver mine overnight. It takes years, sometimes a decade or more, to bring a new mine from discovery to production. And here is another critical factor that most people do not realize. About 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver production is largely driven by the economics of those other metals, not by the price of silver itself. You could see the silver price double, and it wouldn't dramatically increase silver production because the miners are making their decisions based on copper prices or zinc prices, not silver prices. Meanwhile, demand is accelerating at an unprecedented rate. The solar industry alone is projected to consume somewhere between 100 and 150 million ounces of silver per year by 2030. And those estimates keep getting revised upward as solar deployment accelerates faster than anyone predicted. Electric vehicle production is ramping up globally. The electrification of everything requires silver, and then you have investment demand on top of industrial demand. When investors start to wake up to the fact that we're in a structural supply deficit, when they realize that JP Morgan and other sophisticated players have been accumulating for years, when they understand that governments are now competing for supply, you're going to see investment demand go through the roof. And unlike industrial users who need silver for production, investors are price insensitive up to a certain point. If investors decide they want to own silver as a strategic asset, as a hedge against currency debasement, as a speculation on the green energy transition, they'll pay whatever they need to pay to get it. Now, let's connect all of these dots, because this is where the picture becomes crystal clear. JP Morgan spent years accumulating physical silver while simultaneously suppressing the price through futures market manipulation. They paid the fines, they took the heat, but they got their position built. Now we're entering a phase where industrial demand is exploding, government demand is entering the picture, supply is constrained, and the price is still sitting near historical lows when you adjust for inflation. The silver price peaked at around $50 an ounce back in 1980 and again in 2011. Adjusted for inflation, that 1980 peak would be over $150 an ounce today. We're currently trading around $25 to $30 an ounce, depending on when you're watching this. Do you see the disconnect? We have fundamentals that are exponentially better than they were in 1980. We have demand drivers that didn't even exist back then, and yet the price is a fraction of where it was in real terms. This is the opportunity that JP Morgan saw years ago. This is why they were willing to pay nearly $1 billion in fines and still keep building their position. They know something that most retail investors haven't figured out yet. They know that silver is grotesquely undervalued relative to its importance in the modern economy. They know that when this market turns, it's going to turn violently and quickly, and they've positioned themselves to profit enormously from that move. Let's talk about what happens when the silver market really starts to move, because the dynamics are unlike almost any other market. The silver market is relatively small compared to other commodities. The entire above ground investment grade silver inventory is worth maybe $50 to $60 billion at current prices. That sounds like a lot until you realize that Apple has a market cap of over $3 trillion. One large tech company is worth 50 times the entire global investment silver market. What that means is that it doesn't take a lot of capital to move the silver market dramatically. If even a small percentage of global investment capital decides to allocate to silver, it overwhelms the available supply. We've seen this happen before. In 2011, when silver went from $18 to nearly $50 in just a few months, that wasn't driven by fundamentals changing overnight. That was driven by investment demand suddenly flooding into a small market. And when the market is that small, price discovery happens violently. Now imagine that scenario playing out again, but this time with even better fundamentals, with government buyers competing for supply, with industrial demand at all-time highs, and with JP Morgan sitting on a mountain of physical metal watching the price rocket higher. They're not going to sell into the initial move. They're going to let it run. They're going to let the momentum build. They're going to let the fear of missing out drive retail investors and institutional investors into the market, pushing the price higher and higher. And only then will they start to carefully unload portions of their position at prices that seemed impossible just months earlier. This is how the big money operates. They don't chase rallies. They position themselves years in advance. They endure the criticism and the boredom of holding an asset that's going nowhere. And then they profit enormously when their thesis finally plays out. JP Morgan has demonstrated this strategy across multiple markets over decades. They're not in the business of hoping, they're in the business of knowing. So what's the catalyst that actually triggers this move? What's the spark that lights the fuse? Well, it could be several things, and frankly, it could be a combination of factors all hitting at once. It could be a major solar company announcing that they're unable to secure enough silver for their production needs, signaling to the market that supply is genuinely tight. It could be the U.S. government actually announcing a formal strategic silver reserve and beginning to make large purchases. It could be a major mine disruption in Mexico or Peru, two of the largest silver-producing countries. It could be inflation fears driving investors back into precious metals as a store of value. Or, and this is what I think is most likely, it could be a gradual awakening where more and more investors start to piece together the same story I'm telling you right now. They start to see the supply deficits. They start to understand the demand drivers. They start to realize that JP Morgan and other insiders have been accumulating for years, and they start to position themselves accordingly. That gradual awakening turns into a stampede, and suddenly everyone wants silver all at the same time. When that happens, the available supply evaporates almost overnight. Premiums on physical silver coins and bars skyrocket. Dealers run out of inventory. Delivery times extend from days to weeks to months. And the paper price, the futures price, starts to disconnect from the physical price because there's simply not enough physical metal to satisfy demand. We saw glimpses of this during the pandemic, when premiums on silver eagles went from $3 over spot to $10 or $12 over spot because demand overwhelmed supply. Now imagine that scenario, but amplified tenfold, because instead of just retail investors buying coins, you have industrial users panicking about supply, governments making large purchases, and institutional investors allocating serious capital. The price could easily double or triple in a matter of months. And if the momentum really builds, we could see moves that dwarf the 2011 rally. Here's what you need to understand. JP Morgan isn't gambling. They don't build positions this large based on hope or speculation. They have access to data and analysis that retail investors can only dream of. They have relationships with major industrial users. They understand supply chains at a granular level. They have economists and analysts running sophisticated models on future demand, and all of that analysis pointed them toward building the largest private silver hoard in history. The emergency moves by the U.S. government are essentially confirmation that the thesis is correct. When governments start treating silver as a strategic asset, that's validation from the highest levels that this metal is critically important and potentially in short supply. Governments don't create strategic reserves for commodities that are abundant and easily accessible. They create strategic reserves for materials that they are worried about being able to secure in times of crisis or conflict. Let me give you some historical context that makes this even more compelling. Throughout history, silver has been money. For thousands of years, civilizations around the world use silver as currency. The word for money and the word for silver are the same in many languages. The Roman denarius was silver, Spanish pieces of 8 were silver, American dimes, quarters, and half dollars were 90% silver until 1965. Silver has always been valuable, and it's always been trusted as a store of wealth. What changed in the modern era is that governments moved away from precious metal-backed currencies and toward fiat currencies backed by nothing but promises and the full faith and credit of governments. And for a while that worked reasonably well, but we're now seeing the consequences of unlimited money printing, massive government debts, and currencies that are being debased at an alarming rate. People are starting to question whether these paper promises will hold their value over time. That's where silver comes back into the picture. Not necessarily as a currency, but as a hedge, as a store of value, as an asset that can't be printed or created out of thin air. Unlike dollars or euros or yen, you can't just decide to create more silver. It has to be mined out of the ground. It has to be refined and processed. There's a real cost and real scarcity associated with it. And in a world where currencies are being devalued at record rates, that scarcity becomes extremely valuable. Now let us talk about the gold to silver ratio, because this is another piece of the puzzle that sophisticated investors are watching closely. Historically, the gold to silver ratio has averaged somewhere around 15 to 1 or 20 to 1. That means it took 15 to 20 ounces of silver to buy 1 ounce of gold. Right now, that ratio is sitting at around 80 to 1 or 90 to 1, meaning it takes 80 to 90 ounces of silver to buy 1 ounce of gold. What this tells us is that silver is extremely cheap relative to gold by historical standards. Now you might say, well, maybe gold is just overvalued, but gold has been breaking out to new all-time highs. Central banks around the world are buying gold at record rates. So if gold is properly valued or even undervalued and the historical gold to silver ratio is 15 to 1, then silver should be trading at significantly higher prices just to maintain that historical relationship. If gold is at $2,000 an ounce and the ratio returns to 20 to 1, silver should be at $100 an ounce. That's 4 times higher than current prices just from mean reversion in the gold to silver ratio, without even accounting for all the industrial demand drivers and supply constraints we've been discussing. This is another factor that JP Morgan and other sophisticated investors absolutely understand. They're not just betting on silver going up, they're betting on silver outperforming gold on a percentage basis, potentially by a massive margin. Let's also discuss the geopolitical dimensions of this situation, because they're critically important and often overlooked. China has been systematically securing supply chains for critical materials for over 2 decades. They control the vast majority of rare earth element production. They've locked up lithium supplies through strategic investments and partnerships around the world. They've built relationships with mining companies and mining countries that give them preferential access to materials. The United States and other Western nations are now realizing that they're dangerously dependent on potentially adversarial nations for materials that are critical to their economic and military security. This is why you're seeing bipartisan support for reshoring critical supply chains, for building strategic reserves, for securing domestic sources of these materials. Silver fits squarely into this category. It's essential for defense applications, for technology, and for the green energy transition that Western governments are committed to pursuing. When national security considerations enter the picture, price becomes a secondary concern. If the US government decides they need to secure a certain amount of silver for strategic purposes, they're going to pay whatever it takes to get it. They're not going to let price sensitivity prevent them from securing materials that could be critical in a future conflict or economic competition with China. This is a game changer for the silver market because it adds a buyer with essentially unlimited resources who's willing to pay whatever is necessary. Think about what happened with oil in the 1970s. When OPEC restricted supply and oil became a matter of national security, the price went from $3 a barrel to over $30 a barrel in just a few years. It wasn't gradual. It wasn't orderly. It was a panic-driven surge as people realized that a critical commodity was potentially in short supply. We could see something similar with silver, except the fundamentals are even more compelling because we're talking about a material that's essential for the technological transformation of the entire global economy. The artificial intelligence boom that everyone's talking about requires massive amounts of new data centers, new computing infrastructure, new electrical systems. All of that requires silver. The shift to renewable energy requires silver. The electrification of transportation requires silver. The build-out of 5G and eventually 6G telecommunications networks requires silver. We're not talking about one industry driving demand. We're talking about every major technological trend of the next decade converging to create unprecedented demand for this one metal. And here's something that keeps me up at night. What happens when the average investor finally figures this out? Right now, precious metals represent less than 1% of global investment portfolios. During the 1970s, precious metals represented over 5% of investment portfolios. If we see even a modest return to those allocation levels, the amount of capital that would flood into the silver market would be absolutely staggering. Remember, the entire investment silver market is only worth $50 to $60 billion. The global bond market is worth over $100 trillion. The global stock market is worth over $100 trillion. If just 1/10 of 1% of that capital decides to move into silver, we're talking about $200 billion chasing a $50 billion market. The math is simple. Prices would have to rise dramatically to equilibrate supply and demand. JP Morgan knows all of this. They've done the math, they've run the scenarios, they've positioned themselves for what they believe is going to be one of the great investment opportunities of this decade, and they've done it while paying whatever fines were necessary, enduring whatever regulatory scrutiny came their way, because they understand that the potential profits dwarf any costs they might incur along the way. So where does this leave you? What should you be doing with this information? Well, I'm not a financial advisor, so I can't tell you what to do with your money, but I can tell you what the smart money has already done. They've accumulated physical metal, they've positioned themselves for a major move higher, they've done their homework, they've built their positions, and now they're waiting for the market to catch up to reality. The beautiful thing about silver, unlike stocks or bonds or most other investments, is that it's a tangible asset. You can hold it in your hand. It doesn't depend on a company's earnings or a government's promises. It has intrinsic value based on its unique properties and its irreplaceable role in modern technology. And when monetary systems get shaky, when inflation erodes purchasing power, when geopolitical tensions rise, people have historically turned to precious metals as a store of value and a hedge against chaos. We're living in a time of unprecedented monetary expansion, massive government debt, geopolitical instability, and technological transformation. All of these factors point towards silver being one of the most strategic assets you can own. JP Morgan figured this out years ago. The US government is figuring it out now. The question is, when are you gonna figure it out? The window of opportunity to acquire silver at these prices may be closing faster than most people realize. Once the narrative shifts, once the mainstream media starts covering the supply deficits and the strategic importance of silver, once your neighbor is talking about buying silver, the easy money will have already been made. The time to position yourself is when nobody's talking about it. When it seems boring, when conventional wisdom says precious metals are a relic of the past. That's exactly where we are right now, and that's exactly why the smart money has been accumulating. Don't wait for confirmation from CNBC or Bloomberg. Don't wait for silver to hit $50 before you decide it's worth paying attention to. By then, the people who position themselves early will be taking profits while latecomers are chasing the rally. This is your wake-up call. This is your opportunity to get ahead of a massive move that's been years in the making. JP Morgan didn't accumulate 800 million ounces for fun. The US government isn't making emergency strategic moves because everything's fine. The supply and demand fundamentals have never been better, and the price remains historically cheap. The silver market bombshell isn't coming. It's already here. You just have to open your eyes and see it. The question now is whether you'll act on this information while there's still time, or whether you'll look back years from now and wish you had paid attention when the opportunity was staring you right in the face.